Welcome back to the ETF Inspector. It's Monday, December 1st, a little after 6:30 at night. And this is our daily recap video for trades and holdings within these three YieldMax funds. ULTY, the Ultra Option Income Strategy Fund, LFGY, the Crypto Industry Portfolio Option Income Fund, and SLTY, the Ultra Short Option Income Fund. Reminder, I'm on X at ETF_Inspector1. I must have scrolled down. There we go. At ETF_Inspector1. Just for all things pointing back to the YouTube channel. I've got the earlier video in the process of uploading. Still has about a half hour to go. So we'll go ahead and start recording this next one. Keep things moving. Sitting outside of my daughter's soccer practice after picking up the other kids from basketball practice. So it was back to the ugly days again. So ULTY down 1.84%. Never had a chance. Up here, if you can see on my arrow, don't follow the dot. That is the break-even line. We never even thought about it all day. We look at LFGY. Crypto got roughed up as well. I don't know, did I say the number? What did I say? 1.84%. Crypto, LFGY down 2.55%. Not even thinking about it. But if you've got SLTY, then you're doing pretty good, up 1.5%. Because if you're short in the market and it goes down, you make money. All right, let's go ahead and look at our spreadsheets. We'll start with the trades. ULTY had a little bit. First off, closing Google 340 contracts and reselling at 330. That actually seems odd. Buying to close the 340. Yeah, okay, never mind. Yep, so buying to close the 340, selling the 330. So bringing the strike price closer to the current share price. So that brought in $146,000. IBIT closing out the 53s and 54s and selling 50s and $50.50. Also adjusting one of the puts, brought in a credit of $807,000. Those are the only two complete closeouts. That's what the orange is for. Under construction, it shows it on the next page. Some things that are under construction and won't be there after the holdings download comes out. Next we have LLY. That's Eli Lilly Company. All they were doing was adjusting some puts, taking some profits on puts. So $151,000 credit for Teradyne. They started a put spread where they bought $17 puts. Hang on, this one's too new for me. Are they a $17 or $170? 170. Glad I checked. Don't want to tell you the wrong thing. So they're buying $170 puts and selling $180 puts. That is a put credit spread, also known as a bull credit or a bull put spread, because if you are bullish, right, you are selling closer to the money. If it goes up, it works for you. If it goes down, it does not. So you're bullish on the underlying. So that brought in $734,000. And then Twilio, again, another one that's a little too new for me. Yep, it's $100-something stock. So just adjusting their puts, selling their 123s and buying 120s, cashing in $99,000. All in all, it was a $1.9 million credit on the trading day for ULTY. That's going to go along with getting roughed up in their share values. The difference is this credit is a realized gain. That $26.7 million is an unrealized loss. That's just if you bought stock and it went down, but you didn't sell anything. Your share values dropped by $26 million today. Before we change pages, just a reminder, if you missed it, you want to go back and watch it. You've got the week look ahead video that had YieldMax, ULTY, LFGY, and SLTY, and this time I combined it and put blocks in there and WPay as well. Usually I will combine LFGY and blocks as their own, ULTY and SLTY as their own. I forget where I snuck WPay in the previous week, but put them all together in one and came up with a guess of about 33 cents per share. We will find out tomorrow morning at 6:55 for ULTY. All right. Seems like people were liking the this abbreviated version of the videos, so I'm going to try and keep rolling with it and see what you guys think. And we'll keep the Sunday or the week look ahead, the in-depth detailed part. And then we'll just talk about the details of the trades. And then from there, I won't sit there and read every single number as far as percentages in and out for you throughout the week. So big picture, if you had just purchased the shares within the fund without trading options on them and without, take away everything other than if you just bought all these shares at the same ratio that they are in here, at the same weighting, obviously not the same quantities, you would have been down 2.28% today, as opposed to owning ULTY being down 1.5%, 1.56. That's what that says. I'm thinking that Excel hasn't finished settling out, because that says 1.84%. So we'll factor it. We'll lean on the high side and say 1.84%. Either way, you're better off on this down day in ULTY than owning the underlyings themselves. Not that that makes you feel any better about it moving down. Speaking of these share prices, that probably looks crazy. I'm sure you have to know, if you're watching this video and you own ULTY, that there was a reverse split, that trading at the new reverse split price started today. As you see, it didn't change the asset, the amount of money within the fund. It's still $1.3 billion. It just changed the cost of a share and the number of shares. It's just a math problem. All right, big picture, most everything went down. The frustrating thing will be that the biggest upward movers today are actually in SLTY, the shorted fund, and then the two funds that are just that are bullish on things didn't pick anything that really went up significantly. The big winner for ULTY was SPDR Gold Shares, GLD, up 0.48%. And the big loser, New Scale Power, SMR is the stock ticker, down over 9.5%. Other things to note, for the most part, it's a covered call strategy. They have started doing this, I don't know if I'm saying it right, 1 to 2 or 2 to 1 ratio spreads, where they've got like selling your calls and buying your puts for your collar strategy, but then also doing a put spread, buying the same amount of puts a second time and selling puts most of the time at a higher strike, so closer to the money. So they're generating income on both ends. They're selling the puts and buying the calls and selling the calls, trying to generate income in both directions. They have made a huge changes to the fund and gone from roughly 100% implied volatility down to low 40s. So it should stabilize. Obviously, if you're mad at ULTY over it dropping, you wanted them to stabilize it. They added all these mega cap funds to it, and guess what? They're dropping too. So if they drop, it doesn't matter. It's not an ULTY problem. It's a market problem. But let's see. One thing to note, analog devices calls are actually in the money by 0.5% after a slight increase today. So they actually started the week in the money. We've got Google's puts have gone into the money. The sold puts have gone into the money just a hair, 11 cents. So nothing major. Eli Lilly companies puts have gone into the money as well. Sold puts in by 1.13%. And SoFi, even after a drop of 2.3% today, their calls at 28.50 are still 1.8% in the money. Either way, it's a good thing that they did not close them out today, so they got another day of downward movement. So the intrinsic value of that decreased, and the extrinsic value of time value also decreased, so they will be much cheaper to close out when they do. And finally, Twilio's sold puts at 128 have moved into the money by 0.33% after today's drop. Okay, so hopefully, let me know if you guys like that newer version rather than running down the line every single day, reading every line. The average first call is about 4.5% out of the money, meaning things can move up and we can capture that share value in the share value of ULTY. before we have to start paying to close out calls. And the average put is about 3.67% out of the money. That's the closest to the money sold put, so the one they're generating income off of. So if things drop by another 3.6%, it gets extra bad, because not only do things drop and lower your price, but then you start increasing the cost to close out those sold puts. So it's kind of a double whammy. We already said it, 1.3 billion in assets, 34 million outstanding shares after the reverse split. NAV at the start of the day was around $40.36, closing around $39.67. Like we showed, the stocks app showed a little bit lower price, and that was last week's payment. Again, we're guessing at 33 cents. Next, we'll switch over to LFGY. Now, they had a ton of trades, but it was really just selling. I averaged all these out. They sold some of every share, every fund, every stock or underlying. Can't talk today. Basically trying to generate some income to pay out the distribution, because as you can see, cash, they didn't have any, and government funds, definitely not enough to pay us out. So not a great situation to be in. If it's once in a while, it's not the end of the world. If it's all the time, it's a red flag. But selling shares, and then with those sold shares, you're going to have to close out the call spreads, or the calls that you have on each of them. So there's not a single one of these trades that was like a close and a roll, or a sell to open. Everything is just closing out the calls that are associated with the shares that got sold. It overall resulted in a credit of $194,000, but there's a reason for that. We don't actually own shares of IBIT because of a tax loss harvesting scenario. They swapped all their shares out for deep in the money calls. So when they sold those deep in the money calls down here, obviously it's options trading, so it resulted in $260 something thousand, and that basically offset all the costs of closing out all these options. So not sure if I should take them out. Big picture, they're really not going to factor into, we're either going to have a good week or a bad week, and that's not going to make or break anything, but just telling you how the numbers are playing out. So it's a $194,000 credit in options trading today, and a $5.6 million decrease in share values across the fund. If you didn't watch the video or you forgot from the weekend, the guesstimate was 38.25 cents per share. After a bad Monday, if they make the final decision on Monday, it's possible maybe lower. So we will see tomorrow morning at 6:55. When we take a look at this fund, it is not a collar strategy. There are not protective puts for the most part. There are only a handful of puts within the entire fund. So with most everything dropping, BitMine Immersion took the biggest hit, 12.5% drop. We had a couple things move upwards. GameStop was up 1%. NU Holdings up 0.6%, and the big winner, NVIDIA, up 1.65%. What does that do for our options across the board? We scroll down, it's easy to pick it up. Red, GameStop moving up 1.1%. Of course, that's the worst luck. They were already in the money when the day started, and they moved further into the money. So we really didn't even get to capture that upward movement, because the cost to close out those calls would have moved up right along with the share value increase. Robinhood, even after dropping 4% today, still has their calls at 121 in the money by 1.8%. But either way, that just greatly reduced the cost to close them out with a day of decay as well as 4% drop. They are now only $2.24 in the money, so that 870, it won't drop to 224, but it will drop significantly. And that's it for options that are in the money. There's $176 million in assets under management, 6,225,000 outstanding shares, and the NAV at the start of the day, 28.42, before dropping to around 27.90. the average call is now nearly 7% out of the money, meaning that on average, of course that's average, everything in the fund can move up close to 7%, and we could capture nearly 7% upward movement in our share price before we get to the point of having to pay to close out options to roll to the following week. All right, and finally, SLTY. Man, I feel like I've been saying it for too long now. If I'd have listened to myself, maybe I'd be making some money in these downturns. But SLTY doing well again. All they did was closed some of their puts on Applied Digital and resold them at a higher strike for changing from 21.50 to 24, as well as AppLovin closing their $56 puts. I'm sorry, is that 560? It is. Closing their $560 puts and selling $595 puts. So these two both moved up today when the market moved down, so they adjusted their puts to a new strike. That brought in a credit of $22,000 to go along with share value increases of $608,000. So they were winning on both sides of things. If you missed the video over the weekend, my guesstimate is 53 cents a share for SLTY. Like we said, the fund that is bearish on these and shorting them had two things go up 4%, where ULTY and LFGY didn't have anything close to that. So that's bad luck, though, because if you shorted it, you want it to go down. When it goes up, it decreases your market value. Other than that, most everything went down. I think there may have been, yeah, they've got GameStop in here as well, so that went up 1%. And Wynn Resorts was up over 3%. So they had 4 winners, but that's not good over here. Rigetti Computing was their biggest loser, down 8.22%. That actually took those sold puts into the money by 0.1%. Speaking of options that went in the money, Unicure's puts at 28 went in, or further in the money. They were already in and went further to 5.3%. Myrna mRNA puts at 24.50 have dropped into the money after a 7% drop today. They are 1.41% in. And then, believe it or not, the sold calls on GameStop at 22 are in the money. So they're selling puts to generate income and then selling calls on the top side to generate some more. Unfortunately, that one's not working out for them. They're going to be paying to close those out more than they're going to bring in on the others. Let's see. Better Home and Finance Holding puts at 50 are now 10.8% in the money after a 6.8% drop today. All right, so that's our update. We've got 4.8% out of the money average sold put, meaning on average most of the funds within this, most of the underlyings within the fund could drop nearly 5%. That would get captured in SLTY's share price before they're having to pay to close and roll options. There's 27 million in assets under management, 750,000 outstanding shares, and the NAV at the start was around 36.26 before rising to around 36.75. Okay, that's everything I've got for you. So thank you for watching. I've got a dad joke for you, so I appreciate all the support and feedback. And actually, I told myself, since I put WPay and blocks in the week look ahead, we might as well hit how they did. Just big picture. They don't share their trades, so all we can really look at is how they performed today. WPay was down 1.16%. Obviously, much worse at one part of the day, but they recovered nicely. I mean, from their low on the day to the finish, they went back up 1.3%. Blocks, very similar. Had some pretty low lows, but recovered 3.3% by the end of the day. But big picture, they were down about 3.5%. So Blocks continues to move down at a faster pace than LFGY, which I didn't think would be the case, but it has repeatedly been the case. So Okay, that's all I've got. So I've got a dad joke, hopefully to make you laugh and forget about losing money, because we are getting our feelings hurt by this market. So, all right. Airport police say that the number of people smuggling helium balloons in their luggage is under control, but cases continue to rise. I'm like a news reporter. All right. Thank you for watching. Good luck trading tomorrow, and have a good night. I'll catch you in the next video.